First here, regulatory uncertainty creates rash of novel lawsuits. According to lawyers from Coate Hall and Stewart LLP, the regulatory uncertainty surrounding cryptocurrencies has created a fertile environment for crypto-related litigation and enforcement to grow. In an analysis piece published on Law 360, Coate Hall and Stewart LLP lawyers Mike Gass, Deanna Lloyd, and Alex Bevins noted an increase in evidence of novel applications of existing laws being used to litigate against cryptocurrency users and investors. They predict this trend will only accelerate over time. The lawyers pointed to several precedents, including the prosecution of a U.S. citizen for violating sanctions using crypto, several lawsuits brought by the SEC in recent years, and an increase in class action lawsuits and private litigation. In May, the United States Department of Justice filed a criminal complaint against an unnamed U.S. citizen through the U.S. District Court for the District of Columbia. The complaint alleges that the individual used cryptocurrency to violate sanctions under the International Emergency Economic Powers Act. Lawyers from the firm say that this illustrates an increased willingness of government agencies to pursue criminal charges against those violating old laws with new forms of currency. Other notable litigation cases undertaken by the lawyers include the Securities and Exchange Commission lawsuits against XRP creator Ripple Labs Inc. in 2020 and decentralized content sharing platform LBRY in 2021. Both companies were accused of offering unregistered securities in the form of digital tokens. In February, BlockFi was issued a $100 million fine for failing to register its retail crypto lending product. This failure to comply with regulations highlights the need for greater oversight in the crypto lending industry. The lawyers said that the SEC's willingness to target smaller projects like LBRY shows that the agency is not discriminatory in its enforcement actions. Here is a chart. This is a number of SEC cryptocurrency enforcement actions, and it is broken down here. Pretty interesting. According to the lawyers, research has found that the number of crypto enforcement actions between 2019 and 2021 was greater than the total for all previous years combined. Looking to the future, the lawyers believe that the SEC and DOJ will likely step up their enforcement efforts and will be open to pursuing new theories. It is also clear that private litigation relating to cryptocurrencies is not abating, and increased regulatory clarity may help to reduce this litigation, though it is unclear if this will happen in the near future. It's pretty interesting why it's ramped up so much. Do you guys think it's just because of cryptocurrencies or digital assets? Do you think there's another reason? It's definitely interesting. We'll put out more information as we get it. Up next here, surprise twist as BlockFi receives a money services license in Iowa. Just 2 weeks after receiving a fine from Iowa's regulators for offering and selling unregistered securities, crypto lending platform BlockFi announced on June 28th that it has received a money services license in the state. The BlockFi crypto lending platform has been approved to operate in the state of Iowa. This will allow BlockFi to receive money and sell payment instruments in the state. BlockFi stated on Twitter that it will begin by allowing Iowan residents to trade stablecoins. On June 14th, the Iowa Insurance Division fined BlockFi $943,000 for violations of the State Securities Act, alleging that BlockFi had offered and sold securities in Iowa that were not registered or permitted for sale in Iowa and had failed to register as a broker-dealer or agent. As part of a larger penalty brought by the United States Securities and Exchange Commission in February, the company was fined for not registering an offering of high-yield interest accounts that the commission deemed to be securities. The imposed fine was among the largest that a federal regulator has ever given to a crypto business. BlockFi was required to pay $100 million in settlements, with half given to the SEC and the other half given to 32 states that brought similar charges. BlockFi has announced that it plans to register with the SEC for a crypto interest-bearing security to replace its current interest account offering for U.S. customers. The new license is a sign of good news for BlockFi, which, along with other companies in the blockchain and crypto industry, has struggled in the deteriorating market conditions and falling crypto prices. BlockFi was one of the lending firms forced to liquidate some of the positions from venture firm Three Arrows Capital on June 16th, when the latter was unable to meet a margin call on its Bitcoin borrowings. The decision to lay off 20% of BlockFi's staff came as a result of the need to remain profitable in the current conditions. It is unclear how much of an effect the SEC's financial penalties had on this decision. A week later, on June 21st, BlockFi received a boost from crypto exchange FTX, which saw BlockFi sign a revolving credit facility agreement for $250 million to bolster the firm's balance sheets and strengthen the platform. It was subsequently reported that FTX may be in talks to purchase a stake in BlockFi. However, a BlockFi spokesperson told Cointelegraph on June 24th that the company does not comment on market rumors and is still negotiating the terms of the deal. Shareholders are reportedly unhappy with the move as it would wipe out shareholder equity. That seems a bit sad. I don't know why they would make that type of partnership. It has been reported that Anthony Pompliano's investment firm Morgan Creek is trying to put together a $250 million deal to buy a majority stake in BlockFi. So BlockFi is a major platform. Let me know how you guys feel about it, if it is something that you utilize. Hopefully, if they do take part in this partnership, it's beneficial to all parties involved. We'll continue again to keep you guys updated as the story develops. Up next here, 75% of Marathon's mining fleet still offline 2 weeks after a huge storm. Since a severe storm hit Montana on June 11th, 75% of Marathon Digital Holdings' mining capability has been out of commission. The Bitcoin mining company revealed this information today. Marathon finally issued a statement on its website on June 28th, explaining that the storm struck across the town of Hardin, Montana on June 11th, damaging the power generating facility that supplies Marathon's local mining operations. According to the company, initial electrical tests have found that the majority of the company's miners were not materially damaged by the storm. The company has observed that 30,000 devices, comprising 75% of its total fleet, have been inoperable since the storm. Blockchain explorers tracking Bitcoin mining activity indicate that miners have been inactive for the past fortnight. Marathon's Bitcoin production is expected to take a significant hit until the company can repair its power generating facility in Montana or relocate its miners to new facilities. Marathon CEO Fred Thiel stated that if certain repairs are made in time, the facility could begin mining again at a reduced capacity as early as the first week of July. Following the recent accident at its US-based facility, Marathon has redirected its hash power to external mining pools. By doing so, the company hopes to increase its chances of earning Bitcoin while repairs are being made. In May, Marathon held 9,941 BTC worth approximately $201.4 million with 36,830 active miners, contributing about 3.9 exahashes to the Bitcoin network security. The mining difficulty level on the Bitcoin network has dropped to its lowest point since April, according to the Coin Wars tracker. This could mean that more miners are leaving the network or that the overall hash rate has declined. The company has announced that 19,000 miners representing 1.9 exahashes have been installed in Texas-based facilities and are awaiting the necessary energy to switch them on. In light of the functional outages caused by the recent storm in Hardin, the company is currently evaluating the possibility of expediting the move of its miners to new hosting locations. This could include faster deployment to its new Texas facilities in order to prevent a repeat of the issues experienced in Hardin. So hopefully they're able to get back online soon. That's a big hit. I mean, waiting until July, which is, okay, next week, the first week of July, but still, I mean, being out of operation for that long. So hopefully they're able to get back on soon. Up next here, bear market will last until crypto apps are actually useful. Mark Cuban. Mark Cuban, the billionaire entrepreneur known for his role as one of the main investors on the reality television show Shark Tank, said that the crypto bear market will not be over until there is a better focus on applications with utility. He also does not think that the market has hit cheap prices yet. In the past, Cuban has stated that around 80% of his non-Shark Tank portfolio was in crypto. When asked how long he believes the current crypto bear market will last, he appeared on a June 23rd episode of the Bankless podcast and stated that the current trend will continue until there is a catalyst that changes it or until people become so fed up with it that they take action. He believes that a better focus on applications with utility will pull crypto out of its slump. With so many apps focused on financial technology or collectibles, the launch of a business-focused application would be one of such events that could spark a reversal for markets. If a decentralized version of QuickBooks were to launch, Cuban predicted that many small businesses would begin using it. He believes that such a software would be greatly beneficial to businesses due to its accounting management. Yeah, I think that would be something good, I think, for the space. I think that, different platforms, different tech guys would be smart to take advice from these investors because they know what people are looking for. They have a lot of experience in it. Despite analysts predicting that Bitcoin, as well as many other cryptocurrencies, have reached a price bottom, Cuban says that it's not cheap yet when analyzing the high market capitalization of some projects. He states that even with lower market cap cryptos, there is no utility, and provides a decentralized exchange SushiSwap token as an example of a relatively cheap buy with its $215 million market cap. He adds that those who are liquidity providers are paid in the token, but then raises the question of who would buy it from them and what the reasoning would be. Cuban believes that eventually the crypto industry will consolidate through mergers between different protocols and blockchains. Cuban supports a merge of various blockchains, close others, and then move applications and communities over to just one and offer a token exchange or bridge from the closing blockchains to port users over. In the crypto space, there are various subsectors such as layer 1s, layer 2s, NFTs, and DeFi tokens. Cuban was asked which he was most optimistic on. Cuban stated that he was particularly interested in carbon offset DeFi tokens, which he burns to offset his own personal carbon footprint. He added that while not everyone cares about offsetting their carbon emissions, it was the easiest way to do so in comparison to buying carbon offsets from a broker. It's pretty interesting. Cuban noted that all of the teams had potential, and that was why they had received funding. Each team believed that they were the best and would be successful. So that's pretty interesting, just something to take note of. Always do your own research. Don't just jump in, follow what a celebrity says. Again, look things up. Make sure if you want to invest in something, it's a good fit for you, for your portfolio, what you can afford. But this is just some good insight from him. Up next here, MakerDAO looks to invest $500 million into minimal risk treasuries and bonds. The Maker community is currently voting on a proposal to invest 500 million DAI stablecoins into a combination of U.S. treasuries and bonds in order to help weather the bear market and utilize untapped reserves. After a straw poll and a governance signal request, the Decentralized Autonomous Organization, or DAO members, are now discussing whether the dormant DAI should go entirely into short-term treasuries or split 80% into treasuries and 20% into corporate bonds. The Maker protocol is governed by MakerDAO, which issues DAI stablecoins pegged to the US dollar in exchange for deposits of cryptocurrencies such as Ether and wrapped Bitcoin. DAI can be used in nearly 30 different cryptocurrencies. This proposal marks a significant milestone for MakerDAO as it demonstrates its intent to expand beyond the cryptocurrency realm and earn yield from more traditional, safe financial investments through its flagship DAI token. MakerDAO governance participation is currently at its lowest level in 2022, with just 12 voters supporting the option to split the DAI between treasuries and bonds. This represents just 169,196 Maker tokens out of a total supply of 1 million Maker. The poll ends on June 30th at 12 p.m. ET. European wholesale lender Monetalis will then provide MakerDAO access to the financial instruments it wants, as per the signal request issued by Monetalis CEO Alan Peterson in the forum. Monetalis has a goal of transitioning to low carbon resource efficiency as per the UN's definition. The DAO has decided to invest a large sum of funds based on recommendations from members who believe that deploying these unused funds could help increase the protocol's profitability with minimal risk. MakerDAO Strategic Finance Core Unit Sebastian Derivo believes that the proposed amount for the allocation is high, but it is a safe choice for the DAO. An investment of 500 million DAI in this context is not a significant risk for the DAI peg or the solvency of MakerDAO because it is expected to remain liquid and have low volatility. Out of the 5 options that were up for debate, Derivo suggested that the 2 currently being voted on were the best. Despite this move for Maker is down 1.6% over the past 24 hours and is currently trading at $964.71 according to CoinGecko. So there you have that. If that's something you follow, some update for you. We'll continue to update on all of these things as new articles develop, because I know in this crypto industry, There's so many things that people can be interested in. So we try to give something for everyone. Last but not least here, battle-hardened Ronin Bridge to Axie reopens following $600 million hack. Sky Mavis, the developers of the popular play-to-earn non-fungible token game Axie Infinity, have announced that the Ronin Bridge is back online 3 months after it was hacked for more than $600 million. The Ronin Bridge is a blockchain platform that enables users to transfer assets between the sidechain and the Ethereum mainnet. This makes it possible for users to manage their assets and transactions with greater flexibility and security. On March 29th, 173,600 Ether and 25.5 million USD coin were drained from the bridge after hackers managed to gain access to private validator keys. The hack was worth more than $620 million at the time. The Sky Mavis team announced that the Ronin Bridge is back online after 3 audits, a new design, and full compensations of users' stolen assets. They stated that all wrapped ETH and USDC owned by Ronin Network users is now fully backed 1-to-1 by ETH and USDC on Ethereum as promised. All users have been made whole. Sky Mavis has now reimbursements of a total of 117,600 ETH and 25.5 million USDC by providing ETH liquidity to back users' wrapped ETH on the Ronin Network. This includes around 46,000 ETH that was already compensated in April after Binance provided a bridge to its exchange so that users could swap out wrapped ETH for ETH. The liquidity for this move was sourced from the Axie Infinity Balance and Founders Funds. In addition, Binance has led a $150 million funding round to help Sky Mavis repay Axie Infinity users. The remaining 56,000 ETH that was stolen belongs to the Axie DAO treasury and will remain uncollateralized as Sky Mavis works with law enforcement to recover the funds. As part of the updated bridge design, Sky Mavis has enabled validators to set daily withdrawal limits with the initial amount set at $50 million. The team has also introduced a circuit breaker system to break down the monetary value of withdrawals into 3 tiers. In a post-mortem report in late April, Sky Mavis acknowledged that its lack of decentralization had made the Ronin Bridge vulnerable to the hack. At the time, the company had just 9 validator nodes, with employees having access to 4 of them. Sky Mavis promptly raised the number of nodes to 11 and outlined intentions to raise the count to 21 within 3 months of the postmortem, with the long-term goal of surpassing 100 total nodes. The team did not provide an update on the number of validator nodes the Ronin Network has in its latest announcement. Axie Infinity has seen a dramatic decrease in its monthly NFT sales volume in 2022. The game went from generating $126.4 million in January to just $2.8 million in June. So hopefully with the repayment of their customers, hopefully all of this can get back up soon for the game. It's very unfortunate when things like this happen. That is all we have for you today. Thank you guys so much for watching. Make sure to like, subscribe, hit that notification bell, leave a comment on what you want to see in a future video, and we'll see you next time.